What's up, everyone? How's it going? This is Johansson. Happy President's Day. Wanted to touch base and come out with a video today that's not so much talking about my portfolio or my stocks or anything like that, but talking about something that can be used as a tool in the future, which is Robinhood margin investment. Now, for this, you're obviously going to need Robinhood to use the margin investment. So before we get into the video, as usual, this is not financial advice. Please do your own due diligence. It's just for entertainment purposes. Also, if you like the video and you like the content, please subscribe and hit a like. I would really appreciate that, and it really helps out the channel as we're trying to grow from scratch. And then last but not least, if you want some free stocks, check out the links below from WeBull and from Robinhood. Also, there's a link there from Coinbase in case you want to invest in some crypto and get $10 back just for adding some money and getting some crypto account. So what is Robinhood investment? Let's just jump right into it, right? Robinhood margin investment, sorry. Robinhood margin investment essentially means that you can use X amount of money from Robinhood based on what you have in your account, right? For example, right now I have $65,000 in my account, and Robinhood allows me 47,000 margin investment, just extra 47,000 I can play with, right? So the full disclaimer from margin investment right off the bat, it's extremely risky, especially if you don't know what you're doing, right? So you're gambling with money that's not yours. So if you use it on a stock that, you want to use $40,000, let's say, on a stock that you just throw it out to try to see if you can double gains, but then the stock drops, you lose that money, right? 50%, you say you lose that. You have to make that up from somewhere. So they're going to take it from your account, right? Also, margin investing does have fees tied to it, right? You can't just use all that free money without anything tying to it, right? So it's about a 2.5% yearly interest after you use your first 1,000, right? So if you use 50,000, they'll charge you interest from 49,000, right? So it's pretty easy to calculate. Let's say you use 50,000. Actually, for example, 49,000, and then it's 0.025, right? So that's what they're going to charge you annually, 12.25, right? Now you're divided by 360 days. It means you're getting charged about $3.50 per day to use it, which is extremely cheap in my opinion for using $50,000. Now, let's look at my account. Once again, I have 66,000 here in my portfolio, and then if we look at it right here at buying power, you can edit your margin investment, assuming you have Robinhood up by doing this. So I have it right now as a limit of 38,000. I don't want to use any more than 38,000. That's just a random number I picked. I just don't want to use everything that's available for me. I've used 34,000. I have 3,400 left, right? Pretty simple to see there. If I wanted to update my borrowing limit, right, I can choose from instead of 38,000 to the 47,000 I was just talking about. That's the max I can use from a margin based on my market value. If my market value goes from 65,000 to 70, 85, 100,000, this is going to grow as well, and I'll be able to use it more. But right now I have it at 38,000, right? So I've used, once again, 38,000. And then here's an overall look at my account. So I have 63,000 in stocks, 2,700 in crypto, and this is the 34,000 I have in margin investment. And I have it on regular stocks, right? So once again, extremely risky, not financial advice. So do your own due diligence. Extremely risky if you are just, you got to know what you're doing. I have this in stocks that I already like, so I think they're going to do well because I have most of my money in them. So this has just helped me get bigger returns overall. So I'm working with $100,000 instead of the $65,000 or $66,000 I have in Robinhood. So it increases my essential buying power and earning power. Cool. So I wanted to provide you guys an update on how I think this could be used in a safer way. Let's say you don't want to do it in the way that I'm doing it. And this is the way that I would do it if I had maybe 200,000 to 300,000 that I'm working on margin. I don't want to be as risky as I'm doing it now. I would want to use it in a much safer way. Once again, not financial advice. This is just an example that I would probably use in the future once I get more money into my Robinhood account and the account keeps growing. And it's a pretty easy example, which would be use the amount of margin available, but put in EFTs. EFTs are usually a lot safer than individual stocks. They're powered a lot more stocks, so they don't have that same volatility. And then overall, they can you can grow depending on which EFT you can use. So I have three examples here. I have an example of an ARC EFT, which on average are doing 100% a year. But let's say they don't even continue at that rate. I have a second example where an ARC EFTs on average is doing, let's say, 30% a year, which is a big drop off from the 100%. And then I have a third example with the average EFT being 13%, which is the average return if you look it up on Google, what EFTs give you on an annual basis. Over the last few years. So let's start off this example with $50,000 of margin, 2.5% interest rate, cost per day is $3.50, cost per year is $1,250, and the cost of having gold. So it's $5 a month, 12 times 12, that's $60 a year. So example 1, 100% ARC EFT. Example 2, 30% ARC EFT. Example 3, just an average 13% on any other EFT. So on this example, you grew your 50,000 you're using. Remember, money that's not yours. You grew that to 100,000 essentially. So your growth was 50,000. That's the money you get to keep. On this example, you grew it, 50,000 times 30%, that's 15,000. And on this example, times 13%, that's 6,500. So how much do you get to take home every year if this is how it works? Especially when, once again, you're using money that's not yours, right? On this example, I calculated the average tax rate of like long-term capital gains, which is about 15%. So that's why I have that 85% here. So you get the 50,000 times 0.85 minus the cost per year of interest and then the cost per year of the gold membership. So here I'm taking home 41,000. In example number two, I take home 11,000. And even in the lowest example, right, the average return on any EFT, you get 4,000, 4,200. Once again, that's essentially like free money. Now, it's free money that comes with high risk. I say this often, high risk. Um, but at the end of the day, I leave that up to everybody else. This is just something that I'm doing right now. I'm using margin that I plan to do later on as my margin increases and kind of switch off from that individual stocks into EFTs. And I just wanted to share with you guys because not everyone knows that Robinhood has its features, its margin investment. Uh, not every brokerage has. So I think it's really cool. I just started using it about a week ago. I'll keep you guys posted on it. Once again, not financial advice. And if you guys liked what I just said, please, hit me once again with the like button and the subscribe button. And I'll see you guys tomorrow with another update on the market itself. So appreciate it.